You see the breakout. Volume confirms it. You enter long. Then price immediately reverses against you. Sound familiar?
Order flow reveals what volume can't. Was that breakout driven by genuine buying pressure or just temporary covering? Initiative buyers, initiative sellers, and commitment of trade reveal who's driving every move. Institutions, algorithms, and informed traders. Stop guessing. Start knowing. Experience order flow intelligence at charts.vtrender.com. Every day, traders make decisions based on red and green candles. But what if those candles are only showing you half the story? At every moment, three prices exist: bid, ask, and last traded. Only aggressive intent moves markets. Patient orders don't. Buyers, initiative sellers, and commitment of trade reveal who's driving every move. Institutions, algorithms, and informed traders. Stop guessing. Start knowing. Experience order flow intelligence at charts.vtrender.com.
Retail traders see the market through simplified lenses, basic price movements, and volume totals.
Institutions monitor every bid, every ask, every aggressive order, tracking market intent in real time.
While retail celebrates a green candle, institutions see the initiative selling that's about to reverse it. Order flow analysis gives retail traders institutional-grade market intelligence.
You wouldn't face Jasprit Bumrah with a plastic bat. Yet thousands of traders enter India's derivatives market with zero trade.
4% of traders lose, not because they aren't smart, but because they chase candles and ignore what institutions are actually doing.
Our 12-video e-course reveals how markets actually move through order flow and market profile. See the forces behind price, not just price itself.
Stop reacting to candles. Start reading institutional intent. Join the e-course now. 4,909 for lifetime access.
20 years ago, markets moved slowly. Traders had time to think. Information traveled at human speed.
Today, algorithms execute thousands of trades per second. Markets react to information in microseconds, not minutes.
Derivatives markets are now 10x larger than cash markets. Traditional analysis wasn't built for this complexity.
In this new world, success requires seeing what algorithms see. Order flow, not just price history.
Good evening, guys. Good evening, everyone. A quick sound check. Am I audible? Great. So let's start with the base. We are in the first page of the VTrender charts and we have the Nifty, by default Nifty profile on screen. This is the Nifty futures and tomorrow we have the weekly settlement. So I'll just switch this into a 2-window mode, and along with the Nifty futures, I would want to see what the spot is showing me, because the settlement is done on the basis of spot. So we need to be aware about the spot levels as well when we are looking to trade the settlement day. So today's session is about how to prepare for a weekly settlement. What is the range that we need to mark out? What are the tools that we need to look at before tomorrow? And also what are the tools that we need to look at tomorrow in live market? So what have we done in Nifty? A quick look of today's auction. Nifty futures is on the left, and what we have done is we have formed a narrow range Gaussian curve, which is completely inside previous range, and we have been below previous POC. So this is what we have done in the futures. And in spot, what we saw was a rejection at previous day high, an A period selling tail, and then a nice balance which formed for the rest of the day. We did see a swipe lower in the I period, but that was immediately rejected. We held this buying tail from Friday. So we have left a buying tail at the lows and a selling tail at the top. And we have a nice balanced profile in the middle. So to say we have formed a 313 profile would not be wrong in Nifty spot. So what are the range we are looking at? So Nifty spot, the high was around the Friday high of 25139. And to recall what level this was the July series VWAP, which was a neutral extreme profile. 25142 was the VWAP of July, and we were following that in the month of August, where we made the monthly highs right at that level. 25153 was the high we made in August, and we left a selling tail right at that series VWAP. So it was showing us that the sellers were coming back at that level. So today when we are seeing this initiative selling tail and inability to get above that highs, it is again showing that the sellers are still holding this level. But what we have done, we have seen Nifty go up and we have seen this buying tail. We have seen an extension handle at 25026, which is the weekly extension handle, which is covered in the weekly report which we have published on the forum. So that would be our support on the downside, whereas 25140 is the reference on the upside. So this is the levels which we can see on the chart. So what are the other references which we need to mark out? In futures, we have this 25222, which is an RS from August, and that is the upside reference for us. The fact that we were below previous day's POC and we were not able to take off this VWAP tells us that the buyers were not doing a good job today. So how do we mark out what are the charts do we need to see to mark out the levels for tomorrow? So from this, we know it's an inside bar. We have this value. We have a 2-day value. We can in fact merge these two profiles and we get a nice 2-day balance. So the top end of this 2-day balance is around this 25120 level. So this will be our reference on the upside, and the value area low of 25080 would be our lower reference. We have closed below this value. The close today is at 25069. So our first reference would be this 25080. If we are able to get back into this 2-day composite, we have a 80% rule on for this 25120. And then on the downside, we have a tail today, and 25026, as I mentioned, was the extension handle, which will be the support. So this is as far as the spot chart is concerned. How do we look at other tools and what are the weapons we have in our arsenal? So let's start with the spectrum chart. So what does the spectrum chart do? We have 4 tools which we are going to talk about, and the first of it is the spectrum chart, and then we will go to the gamma exposure chart, and then we have the gamma density, and finally we have the VolumeX chart. We have covered all of them in our sessions before, but now to prepare for a settlement day, how do we combine all the 4 and make use of it is what we are going to talk today about. So this is the spectrum, and what do we have in the spectrum? So what I would like to do is, instead of the spectrum, we have another option called the NTM OI charts, which gives us the spectrum along with the open interest, the call open interest and the put open interest. And it also tells us what the MVIS is. So these are very important references, and I'll just run through a brief of what all are there in the chart. So I'll just start with the blank chart, and then we will add on the elements which have been in this. So we have the spot price here in way of the candlestick, and this is what right now we are seeing is a 1 minute time frame. So we can go for 3 minutes, 5 minutes, or 1 minute. Because we are looking at live data and we want to know when the information is changing, it is best to have the 1 minute chart on so that you immediately get to know what is happening. So what you see, this blue line is the call option open interest, and this pink line is the put option open interest. So as OI goes, when the call open interest is rising, that means the market is falling. That is why the calls are being written, and vice versa when the put open interest is rising. So when you're looking at having a down move, you will see this call open interest is going higher and the put open interest is going down. But what we have seen today, the call open interest did go up here, but after that, both of them were parallel to each other. So this is giving us a indication that the market is in a balance, which was the case today. We formed a nice balanced profile. So in the spectrum chart, these are the two elements. First we have, then we have the CE wall, which is the upper range of the spectrum. And then we have the PE wall, and the most important aspect of this chart, which is the gamma reference, the gamma zero level. This one, 25100. So you can see how this gamma zero level was a constant all throughout the day, and not just today, even on Friday, we had this at that reference. So I'll just switch it to the 5 minutes to see where the gamma zero is for this series. So this is a series we started on 10th. 9th was the last weekly settlement. So from the 10th, the gamma zero was first at the 25,000 mark, and then 12th in the middle, in the afternoon, this shifted up to 25,100. And since then, since Friday afternoon, we have got this constant at 25,100. So what is this telling us? This is telling us that the big players are building positions around this level. And gamma zero is the gamma CE wall and the PE wall. You don't need to watch that on the chart. So I'm just switching them off, and we'll just have the gamma zero. And what we need to see is what is happening to the inventory, the put and the call inventory, when compared to the gamma zero level. So you can see how I'll again switch it to today's data. So this is today's 1 minute data which we have. So what we do, we see what the option open interest is showing us when we are getting near this, and if the gamma zero is changing. If the gamma zero is not changing, it is constant, this will act as a magnet. No matter where you are going, it will come back to this. So you can see how we made an attempt to move higher, but it got rejected. We came back to this 25,100. We made new lows in the IP rate, but then again it did not sustain, and we came back to tag this gamma zero. Yes, into the close we again went back lower, but the gamma zero has not changed. So what is this telling us? This is telling us that the most option inventory, highest option inventory is built for a close around this gamma zero level. And what is this? What are these MVIS lines and how are they important? You can see how these MVIS lines will tell you if the option players are changing, adjusting their inventory. So you can see this upper reference, the upper MVIS line has been constant throughout the day. It has not changed. So that tells us that the option writers on the call side have had no need to adjust their inventory because this is not seen any change. But on the other side, the put inventory, you can see this MVIS line after this morning move, it started stepping down. So this is showing us that there is some option inventory on the put side which is had to change their stance. So it could be that they are coming out of a higher strike price and entering a lower strike price. But what this MVIS changing tells us is that there is some on option inventory change in the put side. And you can see how the last inventory change happened in this time frame, just after the C period. After that, this was constant. So when you have these constant MVIS lines, you know that the option players who are built positions for an expiry at the gamma zero level are in control and they are comfortable. They don't have to do any change to their existing inventory. So this is why, even in spite of us making these new lows in the I period, the puts did not make new highs. So this is a very informative chart and very useful, which tells you when you need to be aggressively in a trade and when you need to play for small ranges. And this itself is telling you 25120 on the upside and 25065 on the downside. This is the MVIS line, MVIS zone. So this is what you need to look out and spot and see what is happening at that reference. So this is the spectrum chart. The spectrum chart will show you the gamma zero. It shows you the option inventory and what is happening in the option inventory. Into the close, we have seen a drop. This is but natural because the option writers who come in at the open are booking profits. So this is our first weapon, the spectrum, and the spectrum will tell us how the MVIS is and where the gamma zero is. If there is a shift in this gamma zero level, that is when we need to take notice and see which side of the move is happening and accordingly trade in that direction. So let me now, I'll keep this spectrum chart open because we will have to again do a review at the close, and I'll open up the next tool, the next weapon we have. And what is the next weapon? As I mentioned, that is the gamma exposure. And because we are looking at the Nifty weekly settlement, let us look at the Nifty gamma exposure. So this is what the gamma exposure chart looks like, and what is the information which you are getting from this. So you have the red line which is showing you the short gamma levels, and you have the green line which is showing you the long gamma levels. And when the red is above the green, it is telling you that it's a short gamma market. And where these peaks are coming in, the maximum open interest short gamma is at 25,100 is what it is showing us. And this white line is the combination of the gamma, short gamma and the long gamma. So you can see how even this gamma exposure chart is telling us the same picture, is giving us the same reference as the spectrum is giving. The gamma is at 25,100. So how do we trade this? So if you go to the open of today, you can see how we had two peaks on the short gamma. You had maximum short gamma 25,000 also, and then 25,100 also. And we had long gamma 25,200. So as the day progressed, what did we see? You can see how right at the start of the B period itself, this converged and this became the peak. And you can see how this volumes only began to increase for the rest of the day. We will again come to the option table in the end, and we'll see how that also confirmed maximum volumes coming in at this reference of 25,100. So what do we get from this gamma exposure chart? We get to know whether the market is short gamma or long gamma, and at which strike we are short gamma and which strike is the market long gamma. So that helps us to think, because we are closing to settlement, this is kind of converging. So you can see right through the day, we keep building volumes at this 25,100 zone. We were near the 60 98,000 mark. Now we are near the 94,000 mark. And as we progress these peaks, yes, they are playing hide and seek. Sometimes the green got above the red, but they are very close to each other. And it was a neck to neck right into the close. In fact, in the I period, when we made those new lows, you can see how the red got above the green, and then again the green got above the red, and finally into the close it was the red which was comfortably higher above the green. So we have a short gamma market, right? And this is at the peak 25,100. So this is one important chart which we will have to keep open tomorrow when the settlement is on, because this will keep showing us if there is any change in the inventory, or if this short gamma or long gamma are changing hands. And if the peak changes, for example, we are getting a gap up and a rise, this 25,100 short gamma could get into trouble, and we could see this moving, and we could get a move in the 25,100 call if we are moving upside. Same thing if we are probing lower, then the 25,100 put guys would be in trouble. So they would have a run for their money. So we would have to accordingly look to trade the 25,100 on the long side. So I'll come to that, how to trade that and how to get those signals in particular options. But this gamma exposure will keep us in sync whether you need to remain short gamma or long gamma. Today you could see how right from the B period, the peaks came at 25,100 and it was mainly short gamma which was holding. And what does it tell us? If you go to the options table, so when you have a short gamma market and the gamma exposure is pinned at one strike price, it is very simple to get to the option table and open up the straddle chart of that particular strike price. So 25,100 is our chosen price. So what do we need to do? We just need to open up the 25,100 straddle, and along with the market profile chart, we can make this a 2-window mode and have the line chart alongside. So what information does this give us? So if you know we are in short gamma and 25,100 has been selected from Friday afternoon and it has not changed, so you just can get into a short straddle of the same strike price. But what are the levels you need to mark out? You can see this is Friday's profile where we have left a failed auction here at the highs 172 and we have closed around the lows. So this value of Friday would be our reference to go short. The fact that we opened below Friday's low itself is telling us that it is a short side trade in this straddle. And if I take you to the open of today, you can see how right at the open we got this break below POC and VWAP with this red bar, and then we had this rejection at VWAP and POC, and then again in the B the POC shifted lower and again we broke that. And on the market profile part, very easily we are seeing how we have made continuous range extensions lower. Yes, the range extensions have not been too big, it has been a narrow range one. So from the levels of around 130, 120, 130, the straddle has slipped down to 90 into the close. So it has been a trending move down, and on the right side you can see how there has been no instance of this straddle getting back above VWAP all day. So you can see how the VWAP was well above and the straddle kept losing premium. So this is how you can figure out what if it is a short gamma market, what are the strike which is in short gamma mode, and how do you trade that. This is expected to open lower tomorrow because we have closed around the lows, so it can open around the 60 levels, and from there we will need to see when, if this straddle gives a sign of reversal. So this is one way of trading a short gamma market or a narrow range market when you have a balance being formed. So what does the gamma exposure do is give us the buy exposure and the sell exposure, and it tells us where the maximum open interest is being accumulating. So now let us come to our third weapon which we want to use for tomorrow's, and this is one of the latest additions which we have had at Bitrender charts, and this is the gamma density. So gamma density should not be mistaken for an intraday tool. This gamma density shows us what the option players are doing, what the big smart guns are doing for the weekly settlement. For the settlement, it could be the weekly, it could be the monthly. But what this shows is what the option players are doing to be profitable, and what they are betting for the close to be for the series. And you can see how this convexity and density both are again marking to the 25,100. So this gamma density chart will also be one which you would want to follow all day tomorrow. And what other information that this gamma density gives us? It not only gives us the range of spot for today, which is from 25,049 to 25,139. This was today's range. And it also gives us the 1 sigma level to the downside and the upside. So 25,000, which is the 1 sigma to the downside, will be our lower reference for tomorrow's settlement. So this gamma density is also giving us the range for tomorrow. And on the upside, this 25,200 would be our level to watch. So the gamma 0 is at 25,100, the lower end is at 25,000, and the upper end is at 25,200. So you can see how this was also matching with the spectrum range. The spectrum range, the CE ball was at 25,200 and the PE ball was at 25,000. So I'll come to how you can use this information to trade. In fact, in today's market also, how we could use this to take retracement trades. Because when market is in a balance, you will look at retracement trades. You will not look at breakout trades. So I'll come to that when I discuss what has happened in today's auction. So in this range, there is a 96% probability that the market is going to be in this range for tomorrow's settlement. So that is what the sigma zone gives us. So, sorry, the sigma range is giving us the range for the settlement, but this lower tail and the upper tail, this is giving us the 96% range for tomorrow. There is only a 4% chance that the auction can go out of 24,850 or break 25,300 for tomorrow. So 96% we will be inside this scales, and within this scales, this is our reference. So if we are breaking out of 25,200, then our next reference would be this 25,300, where there is just a 4% chance that we may close above this range. Same thing with this. So this gamma density chart is not only giving us the range, the immediate range, which is 25,000 to 25,200. It is also giving us the tails, the extreme range, which you can use. So this is what the gamma density is about. Tomorrow we will want to have this open. In fact, you can have this 2-window mode on for gamma density and gamma exposure, and keep it open on one of your windows, because that will give you real-time data of which strike price is having short gamma, which strike price is having long gamma, and what is the gamma density showing. So if there is no change in the gamma density, if it remains constant at 25,100, and if both these cones are pointing to 25,100, even tomorrow during the day into the afternoon, we have a very good chance of the market closing at 25,100. So what do we do? Any move away from 25,100, we look for a retracement trade to that level. That will act as a magnet. So that is what the gamma 0 tells us. The gamma. So let us now come to the last of the weapons which we have, and then we will discuss how we could have traded today's market using the information which we have just discussed. So the last and the most important tool which we have is this VolumeX. And VolumeX is the chart which will show us when we are in an imbalance and if that imbalance is likely to continue. So how do we trade this? We have had many sessions on this. The purple line tells us that the put volumes are higher, and the call volumes the blue line tells us that the call volumes, what the call volumes are doing. So purple getting above blue is telling us that the puts volumes are increasing. So we need to look for long side trades in the put. But when is the sign of the imbalance shown? When the distance between these two lines increases. So today you can see the put was mainly above the call, but the distance was not at all increasing. They never diverged. In fact, immediately after any swipe, they used to again come back closer. Even this, when you see the I period, when what happened, there was a clean swipe in the put and a drop in the call. But again, the distance never increased. And they went on to diverge a bit more, but again came back together. And into the close, the distance has increased, but it is more to do with the inventory closing. So this is one chart which you would want to see when you feel there is an imbalance which is on in the market. And how will this chart confirm the line which is the put line, the put VolumeX? If it gets above, it will continue to rise, and the call VolumeX will drop or be constant. It will not rise. So that will mean that the distance between these two would keep on increasing. And as long as the distance increases, you know that the imbalance is in play, and you'll accordingly hold on to trades which you have taken. So this is our last tool. So using these 4 tools, I've already explained. You can in fact have a 2-window mode for this VolumeX and the spectrum chart, or any combination, or you can have a 2-window mode for the spectrum and the gamma exposure, or the spectrum and the VolumeX. So spectrum and the VolumeX, it will give you real-time information of what is happening. I'll just give a small example. Because you are seeing the open interest, and open interest we have already mentioned many times is a delayed information, but the volumes which we are seeing, this is live, this is tick by tick, and we get this information from NSE directly as it is happening. So this OI dropping may be a bit later, but what you see in the VolumeX is immediate. So if you are taking action using this, that the put VolumeX is swiping higher, after a while you will definitely see the put open interest dropping, because the puts are being forced to cover. That is why the volumes are increasing. So that is what this means. And if you are having a 2-window mode of these two, you can see them together. You don't need to watch 2 different screens. So whenever you see the put or the call VolumeX rising, you will definitely see a drop like this in the open interest. So that gives you that confirmation that the writers are in trouble. And this is all the more useful on settlement days, because you will have writers coming in from every nook and corner and down all time frames and at every price level. So the laggard writers mostly get hit into the close. So this combination will help you to be aware about when they're getting hit and how long are they going to remain hit. If this continues to drop and this continues to diverge, you know that you can hold on to one part of your trade after booking profit when you hit the first target. So these are the tools which we have, and as per the range which we discussed, our gamma 0 was at 25,100 today. So let us just open up two charts on the call and the put side. I'll open the 25,000 call and I'll have the candlestick so that we can see the entire day's move in a single window. And I'll have the 25,200 put on the right side. So why I am having these two in the money options chart is to explain how you could use the information which we have already taken from the spectrum and from the gamma exposure chart. So 25,100 was our support. So if you are looking at 25,000 call, 25,100 if it is holding, if it is gamma 0, then 100 is the support in this call, in the 25,100 call for tomorrow's settlement. So any move near the 100 level mark, you can look to take long entries in this call, provided you get an RB or an IB in the order flow. Because market is in a balance, you're looking for retracement trades. So when even in the MVIS, we got that confirmation that the MVIS low is not changing, the inventory is not changing. We knew that the spot is going to get back to 25,100. So when you're not, even for tomorrow, this 100 level would be the important reference in this call. If this is holding and you're getting RBs here, you know that 25,100 on spot will be holding. But if it does not hold, for example, we got an IS over here after the POC shifted here. So this is definitely a short trade in this call for a probe lower. We did make new lows, but we were not able to tag the 25,100. And that is because the MV's low did not break. The option players did not need to change anything in the put side inventory as they were comfortable. Same thing with the put. If 25,100 is the gamma 0, when this put approaches 100, you know this is the support. And you can see how multiple times, right in the initial balance, it made a low of 102, I think. And then it tested this at 11:45 and again in the afternoon. But it was not able to sustain below this. So every time it is breaking, coming near 100, it is giving a retracement back to VWAP and the IBH. So this is how you can use this information of what the range is telling you, and then apply that information to the order flow of that specific option and look to trade retracement trades. Because of the fact when 100 is support in both these options, if you get RBs here, you can make an entry at a very small risk for a tag of VWAP and continue for the IBH probe with stop loss at cost at your entry point. So this happened multiple times today. 100 was the lower range and this IBH was stalling. So this 130 will remain the upper reference in the put, 25,200 put, whereas 100 would be the lower reference. And same thing in call, because the last IS3 came near this POC, which was near 140, would be the upper reference. And you can see how this 140 is coinciding with that 25140 reference in spot which we have, the July series VWAP. And then on the downside, 100 would be the support. So what we want to see tomorrow on the settlement day is what if the spot stays below the 25,100 mark or above the 25,100 mark. And while it is doing so, we also want to keep an eye on the MVIS and the option inventory, which we can do using this and the gamma exposure chart. So as long as this is short gamma, you know that the option sellers at 25,100 are comfortably placed. And you also have the 2500 straddle, which is continuously giving lower lows for all the TPOs today. So if the decline continues tomorrow, it is expected to at least for the first couple of hours or at least till the G period. You can see till what levels that straddle goes to, and if the option inventory keeps increasing. And how do we know the option inventory keeps increasing? We have the option table, and in the option table, you can see where the highest volumes of the day were. So 25,100 was the chosen strike. You can see 86 lakh 71,000 volumes. The highest on the call side was right at that strike. And even on the put, we had a similar 89 lakh 82,000 contracts on the put side. So 2500, you saw a big increase of 1 lakh 61 contracts on the call side, and although it was not much on the put, but overall you have the highest open interest in the 25,100 put and the call. And the next highest volume was at 25,150 and 25,100. 25,050. So whereas when this has been marked as the main level where the options have built the highest position for a close, and the gamma density will continue to show us where the big players are expecting the close at, tomorrow's close at. So accordingly, if there is any change in the chart, then according to that, we will also have to look at trading that change or adjusting the positions. If you are holding a 25,100 straddle chart, the moment it is coming above VWAP tomorrow, or the gamma density or the gamma short is changing to gamma long, then you will also have to come out of that and look at a long side trade in either the 25,100 call or the put. You will get the hit in the 25,100 call or put, but it is advisable to change to trade the one strike deeper. So if 25,100 put is getting hit, it is better to trade the 25,200 put on the long side. So this will be our put to watch out for. Whereas on the long side, if 25,100 call is getting hit, we would want to trade the 25,000 call. And we have already seen how 140 is one important reference in the 25,000 call. And in the 25,200 put, we have the 130 as our reference on the upside. So if we get IB3s in order flow at any of these two references in the call or the put tomorrow, and in sync with that, we are seeing the VolumeX supporting the trade and the gamma exposure getting into a long gamma trade, that is where we need to get into long side trades. Else, if we continue to remain in a narrow range, and if the auction continues to keep building positions at 25,100, you just need to be patient and wait for the auction to show a change. When the change is happening, that is the time where you would get a low risk, high reward trade setup. Till then, there is no point jumping into random trades and hurting physical as well as mental capital, monetary or mental capital. So that these are the tools which we want to use tomorrow. The range is set. 25,100 is the gamma zero. That will be our main hero line for tomorrow. 25,000 will be the lower range. 25,200 is the upper range. We have also seen the 96% chance of the tails. The lower tail is at 24,850 and the upper reference is at 25,300. And mind you, these will keep changing when the market opens tomorrow. So that is the reason we need to have that gamma density chart open and see what are the sigma range and what is the tails which are levels which are showing up. And if the gamma zero changes, even these would change. And accordingly, we will have to keep changing our view as per the latest information which we get. So this is what it is for today. I hope all of us are well prepared for tomorrow's expiry settlement. And it is not just for tomorrow's settlement. Any settlement which comes, this is how you will need to prepare. You will need to see where the option players, where the big guys have built their positions and what they are betting for a close at, which the gamma density will show you. And you will not want to trade against the big players. If there is a change happening, these charts will show you that change, and accordingly you will have to look to trade that setup. So thank you guys for joining in. That is it for today from my side. In case you have any queries on today's session, you can DM me on X. My ID is at Uttam Goel. You can also email us at support@vtender.com. we would be happy to get back to any queries that you have. So wishing all of you all the best for tomorrow's settlement, and let us see how best we can use these 4 tools which I have explained and make most of it. And if possible, get some good trades out of it tomorrow. Signing off for now, and have a great evening, guys.